conference call may contain forward-looking statements with the meaning of Section 27A of the Securities Act of 1933 and Section 21E of the Securities Exchange Act of 1934. The words believe, expect, anticipate, intend, estimate, may, should, could, will, plan, future, continue, and other expressions that are predictions of or indicate future events and trends and that do not relate to historical matters identify forward-looking statements. These forward-looking statements are based largely on our expectations or forecast of future events, can be affected by inaccurate assumptions, and are subject to various business risks and known and unknown uncertainties, a number of which are beyond our control. Therefore, actual results could differ materially from the forward-looking statements contained in this document, and readers are cautioned not to place undue reliance on such forward-looking statements. DGLY will undertake no obligation to publicly update or revise any forward-looking statements, whether as a result of new information, future events, or otherwise. A wide variety of factors could cause or contribute to such differences and could adversely impact revenues, profitability, cash flows, and capital needs. There can be no assurance that the forward-looking statements contained in this document will in fact transpire or prove to be accurate. Ladies and gentlemen, thank you for standing by and welcome to the 2020 First Quarter Operating Results Conference Call. At this time, all participants are in a listen-only mode. Please be advised that today's conference is being recorded. After the speaker's presentation, there will be a question-and-answer session. To ask a question during the session, you will need to press star 1 on your telephone. If you require any further assistance, please press star 0. I would now like to hand the conference over to your speaker for today, Mr. Stan Ross, CEO. Thank you. Mr. Ross, you may begin.
Thanks, Tammy. Thanks, everybody, for joining us today. I have Tom Heckman with us, our CFO. I know we had our year-end call not too many weeks ago, but we do want to make sure and touch on some of the new events that have occurred with our launch of our new disinfectant sanitizer. Also update everybody on some of the litigation matters, but probably more importantly, make sure and share with you the financial side of things for the company and how things are continuing to see progression of improvements in that forefront. So with that, I'll turn over the call to Tom Heckman.
Yeah, thank you, Stan, and welcome to everyone. I'm very happy that you're able to spend some time with us this morning. We did file the 10-Q with the SEC this morning, so it is available, and I do refer you guys to that website for a full depiction of what happened in the first quarter as far as the company goes. So with that, obviously the world changed in the first quarter 2020 with the coronavirus. We started seeing effects of that middle part of the quarter, and certainly towards the end, it had a very, very large impact on the company and certainly on our first quarter earnings. If you look at it, our law enforcement customers, especially new ones, generally require on-site training and installation. So that obviously got cut short towards the end of the quarter. So that had an impact on our revenues. And then you look at our commercial customers, some of our very largest commercial customers like the cruise ships, the taxi cabs, the parking spots of the world, and NASCAR virtually shut down. And they are our largest commercial customers. So it obviously had an impact on us. One thing that really turned the quarter for us was our inability to ship the first order on our large international body camera order. I will tell you, we had it stacked up on the pallets ready to go out the door, and then we got the call that the country had shut down incoming and outgoing people and that, so we obviously couldn't ship that down there, and especially because, our installers would not be able to get in or we couldn't train them and all that. So that obviously had a very large impact on the quarter, or else we'd be talking about some very different numbers had that order gone out. Even with all that going on, our first quarter revenues were slightly higher than our Q4 2019 revenues by about 10,000 or so, and then and only 5% down from Q1 2019 quarter. So actually, I'm with the thing happening to us with the coronavirus. I'm pretty happy with the results on the revenue side, having been down only 5% year over year. The good news is that our cost of revenue declined to where we had more gross profit in the first quarter 2020 as compared to 2019, even though we had 5% less in sales. Our gross margins were 52% for the quarter, for the 2020 quarter, versus 46% in the 2019 quarter. So obviously, we had better sales mix. We still see migration of customers over to more of a service model base, which obviously gives us better gross margins on those sales, and it really showed up in the gross profit line being higher, even though sales were lower for the quarter. If you look at SG&A expense for the quarter, a dramatic drop in the amount of overall SG&A. It dropped by almost $1.1 million year over year, which is a 25% decline. Looking at the numbers or the details, travel costs were much reduced because of the coronavirus pandemic. We did do some staff level reductions in line with what was happening primarily in our commercial customers. NASCAR was shut down, so we had people that were dedicated to that, as well as the cruise ships, taxi cabs, and that. So we made some headcount reductions that showed up somewhat in the first quarter, and then obviously it's going to have good impact on the balance of 2020 as well. Unfortunately, our legal expense was down, and the reason I say unfortunately is that there has been some developments in the Axon appeal. There was a 3-judge panel that had an adverse ruling as far as the appeal goes, and we are, in fact, looking at asking for a rehearing in front of that. So with the appeal happening, our legal spend was much reduced year over year, and it really reflected in lower SG&A for the quarter. If you look at our operating loss line, we had an improvement of $1.2 million or 38% year over year, so that's obviously a good trend. Hopefully we can report operating profits at some time in 2020, but we did see a very, very nice improvement in the operating loss for the quarter. In the below the line items, we had interest expense of $307,000. That's primarily due to the convertible debt that was outstanding partially in the first quarter. That entire issuance, which happened back in August of 2019, has now either been converted or paid off. So those notes are no longer outstanding. We had a non-cash change in fair value of those convertible notes, a $412,000 charge below the line. And then if you look at the proceeds investment agreement, the change in that was a non-cash credit of $307,000 for the quarter. Now, I'll remind you that's the litigation proceeds financing we did a year or two ago, and it's really only paid back, or most of it's only paid back if we're successful in our suit. And obviously, with the developments on the Axon side, the estimate of that obligation was reduced by $307,000 during the quarter. So, with all that said, we were about $900,000 better, an improvement in our overall net loss for the quarter, which, given the world change with the coronavirus, I'm happy to report that we had an improvement in our net loss from that standpoint. Let's look at some other important developments. We have talked about the staff reductions already. In addition to that, we're moving to new facilities with the staff reductions and our movement more to service level, a service model. We're not needing near the space we have now. So we were lucky that our lease was ending. I think it ended in April 30th. So we timed that just right. The new facilities right now look to be about 1/3 of the cost, total occupancy costs that we currently have in our old facilities. So I would hope that makes a good impact in the SG&A for many quarters to come. We did talk about the Axon appeal. I'm sure you will have some questions about that, and we'll address those in the Q&A section. Stan already alluded to the fact that we did add the disinfectant line. And if you step back and look at it, that's really a natural fit with our customer base. Our first responders, law, fire, ambulance, EMS, obviously have a need for disinfectant, and this is an eco-friendly disinfectant. It's not toxic or anything like that. Then even if you have look at our commercial lines, once the cruise ships gets going again, they will be obvious users of that product. Taxi cabs, the same thing. So NASCAR obviously will have a need for it. So we think that this is a good add-on line to our product suite, and we're actually looking at adding some different products in that same category, maybe even some hardware like foggers, sprayers, temperature reading devices, so on and so forth. So we hope that this is a long-term product line for us, and it really will backfill some of the revenue challenges we have caused by the coronavirus. We just recently in April raised $1.5 million in new convertible notes. So our cash position is much better than it was at 3/31. We also applied for and received $1.4 million in the payroll protection program of the SBA. So we're focusing on getting as much of that as we can forgiven, but we're not carrying additional staff just to carry them to get it forgiven. We've made the appropriate reductions where necessary, and we believe that will set us up for good results later in 2020. We also received a smaller, what they call an EIDL loan, EIDL loan from the SBA. It is a loan. It's repayable over 30 years at 3.75% interest. It was a small one for $150,000. We just received that a week or two ago. We still have our challenges with the NASDAQ. You'll recall that we have until June 30 to meet the minimum equity requirement or market capitalization requirement. And as of now, that has not been delayed or changed due to the coronavirus, although I have expectations that it will, but it has not to date. We also have until December 28th to meet the $1 minimum bid price to stay on NASDAQ. So we have our challenges with that, but I think with the coronavirus, we'll be able to get a delay in the deadlines imposed by that. We've also to date have tabled our annual shareholders meeting because of the coronavirus. We didn't know if we could meet face to face or even have that large a meeting with the the rules that come down from the health department and that. We will proceed with the proxy in the near future, and I'm talking the next week or two. We'll probably file our preliminary proxy and then set the annual meeting and so forth. But it is going to be later than it has typically been. So to wind it all up, given the headwinds that the coronavirus caused for the first quarter, I am pretty happy with the trends that we're seeing in our P&L. I do warn you that June 30 will be, we'll see some definite reductions in revenues because of the coronavirus and what's happened on certainly with our international orders and that. But we've dealt with the cost side of it, and I hope to minimize any overall impact, especially when you consider hopefully the added revenue that the disinfectant line will bring to us. So with that, I'll turn it back to you.
Thanks a lot, Tom. And just to continue on the disinfectant line or lines that we may be carrying, we're now currently working with one of the largest manufacturers in the country and working with them directly with some of the products that we would like to see being able to offer to our existing customers and hopefully new customers as well. We have seen quite a bit of a pickup over the last 2 weeks even. We now have a major, chain that has approximately 140 stores that are starting to get out there and do a little bit of the marketing of the product. So that's those orders have started rolling in on a daily basis, which is very encouraging. And so, just like Tom said, while we have our guidance out there at the $13.5 million that we would try to exceed, there's just too many headwinds for us to go ahead and keep that number out there until we know for sure, how quickly things do turn back around and get back to normal, we hope. So we're going to have to pull that from, as a target. But at the same time, I say that and I look at the growth that we're having on the disinfectant and the other products that we're looking to introduce, including the breathalyzer that we have been continuing to work on, and additional opportunities. We may be well surprised in regards to how this plays out. So there is a lot of encouraging things, and we have made a lot of the right moves to sit there and preserve cash and to sit there and look for business opportunities in this environment. So, Tammy, I think we'll go ahead and open up the floor for Q&A now.
Thank you. As a reminder, to ask a question, you will need to press star 1 on your telephone. To withdraw your question, press the pound key. Please stand by while we compile the Q&A roster. Your first question comes from the line of Brian Lubitz with Aegis Capital.
Morning, guys.
Morning, Brian.
Let's dive right into it. So, obviously, Corona has, caused a monkey wrench in pretty much everyone's plans over the course of the last 3 months. Where, even though we deal with first responders, we're not, immune to it. What I want to focus in on is the 5,000 body camera order that you guys announced earlier in the year. Obviously, and I think you guys alluded to this on the last quarter as well. We had, the product at the shipping yard, and then we had to pull it off. Are we getting any feedback from this, customer in regards to when we can actually ship these out? And it's only delayed. It's not canceled. Am I right in that?
Right. Where we're at right now is, we still are talking to them. There's another opportunity within the country that is still wanting to continue to move forward and maybe a little more aggressive than what the federal police are wanting to. So we still see this starting to pick back up, and I would anticipate it, maybe some sign of it beginning here this quarter, since things are opening back up. So we have not had a scenario where they're just up and walking away, if that's what you're curious about, Brian.
Yeah, I wanted to make sure that the contract is still, valid, if you will. Can I ask, Stan, in the delay, are you guys loading up so that when we can actually ship out, it wouldn't be a miss in terms of the amount of cameras we sent out?
Yeah, I think we're just sort of still being cautious because we want to make sure and watch the cash and make sure that this thing continues to move forward. So, we haven't gotten overly aggressive in regards to stocking up inventory at this point in time, but we also are very much aware that the long-term items that would be needed, those we're very comfortable that we have those available to us. So we wouldn't be caught in a pinch where we're waiting 90 days on the long lead item parts.
Okay. Tom, this one's for you. Obviously, it's awesome that we're seeing our margins go from 46 to 52%. I mean, that increase is solid. Do you have an idea, obviously, again, and all this is assuming we're back to normal, but do you have an idea where we can kind of get on top line for margins?
Well, our stated goal has been for some time to get to 60% overall gross margins. I think that's a very attainable target, especially with the service aspect of things and the very nice margins thrown off by that. So I think 60% is a good goal, but it may be even too low given where we're headed with the service piece.
Okay, when you say service, are you lumping in the data storage part of it as well, or is that separate?
Yeah, that's included in there. That's cloud storage, that's installation, that's maintenance contracts, so on and so forth.
Okay, sticking with you, Tom. Obviously we've issued new shares. We have some warrants out there, et cetera. You had mentioned earlier in the call that you're looking for us to get, to a profitability for earnings per share. What do we need for revenue with the shares that are new out there for us to kind of break a profit? Do you have that number in mind?
Well, I do, but we can't really project that. That'd be a forecast. We're not that far away from it in reality, Brian. We've cut a lot of SG&A out, and that obviously lowers our break even from the revenue side. And then you couple with the fact that this disinfectant line, the margins that'll be thrown off by that are quite nice. How big a part of that it will be. So I think the cost side is the big driver, though. SG&A is going to continue to trend down, and hopefully rather sharply because of some of the actions we've taken already.
Okay, and I have two more questions, guys. Sticking with Danilite, since you brought it up. Stan, you had said in the past that you guys are exploring all options in terms of other vendors, other suppliers, and potentially even having your own label, if you will, for DGLY itself. Do we have any type of an update on how we're doing sales-wise with Danilite that we can kind of share at this time?
Yeah, not right now for a couple of reasons, Brian. I want to make sure that we are able to secure a few things in regards to that area that we're focusing on without tipping our hands too much. But I would anticipate a full-blown update on the next quarter call and can share some numbers with you. And not only by then, I would anticipate some of the things that we're exploring will be finalized, and we will be able to talk about, and or you'll see in the form of a release.
Well, piggybacking off of that, Stan, you had mentioned earlier in the call that we're dealing with a chain, and they've started to obviously get some orders that are a little bit more steady. You mentioned in the last call a grocery store chain. I don't know if this is the grocery store chain or if this is a different chain. But that being said, if you were to secure that contract with those guys before the quarter conference call next quarter, is that something that you would let us know about?
Yeah, I think so. And again, the bottom line is they've already started doing a real preliminary looking into the product, and they basically have over 300, this particular contract, over 300, let's call it storefronts. And they did a real quick, circle with everybody, and 140 of them said, "Hey, we're interested in this product. Let's start getting it in here and see what we can do." And that just started occurring here in the obviously in the second quarter. So if they'll continue to build on what they've already got going on and get the other, let's call it 160 plus stores come on board, that'll be a very, very nice relationship. And what would make it nicer is us being able to continue to move towards possibly our own label and even greater margins in regards to the product itself. So, it definitely will be a main topic in our second quarter call. Okay.
Tom, the money on the books at the end of the first quarter was, it's eye-opening, if you will, only $300,000. Am I right? We've got roughly another $3 million on the books since then, the $1.6 million in promissory and $1.4 million for the PPP, so we're closer to $3 million on hand right now?
Yeah, I can't give exact numbers, Brian, but you're right. We raised $1.5 million of cash in the convertible note deal, and we raised between the two different loan programs with the SBA about $1,550,000 or roughly in that neighborhood. So yeah, we added a pile of cash to the books, but I can't tell you exactly where we're at right now.
Okay. And last thing, Stan, is there any update you can give us on the Mobile Insight Data partnership that you guys had announced earlier in the year? Are we getting any traction with that partnership?
Yeah, it still has came along real nicely. And again, with everything being sort of shut down, we haven't had a real opportunity to go out and get in front of a lot of people. But we are absolutely poised to go and start talking to some of these vendors that we've been talking, or potential customers, for over-the-road opportunities. And with NASCAR getting fired back up, that's a positive. The Indy, series is getting ready to go. So, yeah, we're going to be able to see and have the opportunity to start getting in front of these customers right away.
Super. All right. Well, Tom, Stan, thank you guys for your time, and wish you guys the best of luck in the next quarter, and hopefully we see some of these contracts materializing soon.
Absolutely. Thanks, Brian.
Yep. Bye-bye.
Again, to ask an audio question, please press star 1 on your telephone keypad. Your next question comes from the line of Mike Zinnick, and just shareholder.
Stan, Tom, a couple quick questions. So the entity's been public now for 11 years, is that correct?
Well, we've been public since 2005. We've been on the NASDAQ since 2008. So we were public before that, but we went on the NASDAQ January 2008.
Have we ever turned a profit?
Oh yeah, we our first 12 quarters.
Yeah,
we're all profitable sequentially.
Okay, so the first 12, then since then, no profitability.
No, we've had sporadic quarter here, quarter there type earnings.
So I'm just trying to understand how we're not executing and what we're doing to identify that, and what immediate changes are being implemented besides cutting costs and diversifying the business into PPE and some of the niche markets you mentioned.
Yeah, Mike, there's a couple of things. Obviously, you're very much aware of the history we've had in regards to the body camera and some of the litigation side of things, and also the launching of our new Evo product. The Evo product, we probably should have had out a good year and a half before its current launch. So that should help us out quite a bit in just the markets we're looking at right now. Now, the service side of things continues to grow, and as we've had pretty good growth there year over year, and the service model is a lot more profitable to us than just the straight sale to law enforcement. So we have been making that transition, along with the hopeful introduction to new products that would be to our existing clientele, our customers that we have, such as the breathalyzer, obviously the disinfectant, and some of those low-hanging fruit opportunities. The situational security side of things evaporated with everything being shut down, but we do anticipate that starting to pick back up, and that was a very nice entity for us as well.
And what's our burn rate right now per quarter?
Well, we're roughly $1 million short if you look at the cash flow statement. But I will tell you that our trend line is much improved, and a lot of that is because of the cost containment, the headcount reductions, and we're looking at our occupancy costs dropping to a third of what it is now. So I expect improvement throughout the balance of 2020 in our cash burn.
So call it 2.5 to 3 months of cash available. How are we going to bridge that gap?
I'm not following you there, but our quarterly burn is about $1 million.
Your quarterly? I thought you said monthly.
Oh no. and that it's
so
trending.
The 2.5 to 3 quarters. How do you plan on bridging that gap?
Well, we're adding a disinfectant line. We're migrating customers over to the service model. We're cutting costs. We've got a plan, and we're executing right now.
But in all fairness, I'm sure everybody on this call has received countless PPE opportunities from domestic and abroad providers. So the competition is going to be fierce, which it already is. I probably receive personally a half dozen or more a day. So that's kind of difficult to see a company morph from law enforcement products into PPE, and then into some of the niche markets that you mentioned that have a finite growth capability. So I'm just concerned that you're going to run out of cash.
Yeah, the one thing though, Mike, you got to realize is we've got, as far as law enforcement, we've probably sold over half of the agencies out there. As far as of the 18,000, about 9,000 we've sold to, and we still have active, 5,000-6,000 that are out there that we sell to. And so, while you probably heard this comment before too, we truly have that last mile that touches the end user. So we have a very good relationship with our customer base, and so these products that we're talking about, there's already a tremendous amount of confidence and trust in DGLY to where we're seeing them being very receptive into giving us a shot and trying our product, and so hopefully it will turn into increasing the top line, which again will go and help the bottom line and the burn rate, which you're referring to.
So it seems to me you'd probably run multiple things in tandem, obviously trying to run the business profitably, but also consider M&A. Are you considering M&A, and if so, where are you?
So that's a great question, Mike. The industry, just like back in 2009, 10, 11, when things were pretty tough as far as the economy, there was a lot of consolidation and/or companies that just went by the wayside. I do anticipate there being opportunities out there, and there may be some consolidation. Whether or not we're on what end we're on, who knows? But I do see the consolidation, and do see that there's going to be some opportunities, especially if they do not have access to capital. There's some out there that are just really going to have a challenging times. So that's a great question, Mike, and our eyes are wide open for opportunities along those lines.
And do you see the value of the enterprise greater than what the market value is currently? I call it $13.5 million.
It's so frustrating when you sit there and you see other entities out there that are trading at really big multiples of whether it be revenue or whether it be earnings, whatever. So right now we're keeping our head down and going to try to make sure and do what we can do to get to profitability, and the stock should take care of itself. But we definitely will make sure that the news about the successes and the progress we make will get out to the shareholders in the street.
Thank you.
Thank you, Mike.
Your next question comes from the line of Patrick Hattard, private investor.
Good morning. I was wondering, were you guys possibly looking into offering your disinfectant to the airlines besides the cruise lines also?
Yeah, absolutely. We're talking to them all, and one of the things that we have a pretty good relationship with the airline industry because of NASCAR and Indy. They both have airlines that they work with real closely. So we're looking at not only the product, because we feel like the product clearly will meet their needs, but even also some of the equipment for such as electrostatic sprayers and other dispensary type of stuff that will be needed for that fluid. But absolutely, airlines is definitely on our radar. No pun intended.
And what about the other smaller businesses like the restaurants and hair salons and other businesses like that? Are you trying to set something up where they can order directly from you, or how are you planning on getting into that section of the business too?
Yeah, we are, and what we'll do is we already have a little bit of an e-commerce platform on our website that they can get online and order directly, but we look to actually have a much more, I want to say stronger, I guess, platform for this particular product and or products to be talked about, and have it really focused on disinfectants, sanitizers, cleansers, stuff along those lines. So it definitely, we don't want it to be a situation where people look at this and see a company that's involved in video solutions now all of a sudden doing disinfectants. I mean, we absolutely are working with premium, top-notch manufacturers, scientists, all the above, to be able to deliver, a strong line of products. And we will have the platform in which an individual can go, or a store can go, or a company can go and buy from. But yes, we're working on that, and I would hope to have it all up and flying within the next 10 days.
Oh, okay, very good. Thank you very much. I appreciate the information.
Yeah, thank you. Well, listen, we want to thank everybody for their time again today. Again, I know this was sort of a short turn from our year-end call, but we do feel, really good about the direction of where we're going with our product lines, with our expenses, and do believe that we are going to get back to a level of normalcy to where the top line should start improving as well. And therefore, we can all hopefully meet the goal of stock appreciation and earnings from this company. So thanks, everybody, so much for your time. Be safe, and we'll be talking soon.
Ladies and gentlemen, that concludes today's conference call. Thank you for participating. You may now disconnect.